Hi there. Thanks for coming and tuning into our live training session today. So today we're going to be talking about why you're still not getting bigger profits, even though your bookkeeping is technically done, and what your numbers are really telling you, and 3 big reasons why you might not be creating bigger profits in your company. So I'm Caitlin, and my company is Citizen Virtual Business Services. We are a virtual bookkeeping company, and I've been serving plumbing contractors and others in the construction industry for over 4 years. So I'm going to go ahead and just get to the point and start discussing those 3 main points that we discussed. So point number 1 is you're not paying attention to your daily cash balance. You would be shocked to know how many CEOs don't look at their daily cash balance. It's a lot easier to spend the money when you don't look at it, and you may be more conservative in your spending if you decide that you're not going to make your next investment until you have more cash on hand inside of your bank to do so. By seeing your daily cash balance, you are more likely to feel the pressure either to get the production ramped up or to cut back and formulate your budget. So what does that look like? Does that mean you need to sell more? Does that mean that you need more services or products? Does that mean you need to incentivize your team? So ask your team members to send you the daily cash balance, and this should include any cash on hand and any customer payments that are in receipt on that day. So if you've collected, but maybe it hasn't hit your cash account yet, but is set to do so in the next day or 2. That was point number 1. Point number 2, having your finger on the pulse of any new sales and sales metrics. And that should be done every single week. So knowing what your team is producing on a weekly basis in new sales gives you the ability to hold your team to a standard. This also helps you to track weekly sales trends. So say the first few weeks of January are historically slow for you, maybe it's not a great idea for you to be spending all your cash in December in an effort to lower your tax liability or your tax bill, which is a common strategy that people use to be able to get their taxes lowered. Well, when you spend all that money in December, you won't have the cash flow in January that you need to get through a slimmer month. So in January, you might be taking out some sort of a loan just to make your payroll. So an action item could be to have your bookkeeper, your accountant, or even a member of your team to generate a weekly sales KPI. And a KPI is a key performance indicator report, and that should be done on a weekly basis. So maybe pick a day that works best for both you and the person on your team, and hold each other accountable to get it done weekly. It's not enough to have them just generate the report if you don't actually take the time to analyze it and to hear what it's saying about your sales and how it's helping you to reach your goals, or whether maybe you need to fix something in your company. All right, we've covered point number 1 and point number 2. Point number 3, the secret number 3, is looking at the cost of labor more frequently. Is your team just running the payroll and paying subcontractors blindly? So companies like Starbucks, McDonald's, really any large retailer or chain restaurant is going to look at their sales per labor cost ratio on the hour. So we don't expect you to do that. You may not be running a big multi-million or billion-dollar company, but taking a look at your labor costs compared to your new sales KPI report can see what's going on inside of your business. Are the salaries and subcontractors working hard to ensure that you're making more money, or are they hardly working? Knowing exactly who is getting paid and having an expectation of what type of sales should be able to be generated because of that employee or subcontractor's labor for your company is crucial to the cash flow of your business. It's also possible that you're charging too little or you're bidding too low on projects that your team is fulfilling. And again, those labor costs are going to be disproportionate to how much your company is making. So what's the big takeaway? Overall, it's great if the numbers are being categorized in your bookkeeping software. But if we don't use those numbers to make decisions about the company's financial health, the bookkeeping really isn't going to be doing much for you. So ask your team to get these reports for you and hold them accountable to do it. And also hold yourself accountable to take the time to read those reports and to have it tell the story that your company is trying to tell with those numbers. And finally, never take your finger off the pulse of your business and its cash flow. So if you need support on this, feel free to comment below with next steps so that we can reach out to you and talk to you about how we might be able to help support you. If you currently don't have a team to support you in this, we would love to help you get started and help figure out a system for you and maybe complete those KPIs. And if you know a friend or a colleague who might need to hear this information as well, please feel free to share this video with them or tag them below. It's been a pleasure to talk with you today about this subject. If you have any questions or concerns, please let us know.